Hello again. We have this continuing coverage, a terrorist strike on innocent tourists in Pahalgam having rattled the nation, and now a strong message going out from the Prime Minister, giving the armed forces full control to take all action that is military based as far as the retaliatory strike is concerned on Pakistan. To decode market implications, joining us is Swaminathan Aiyar, our consulting editor at ET Now, a noted economist. It's great to have you with us, sir, and it's a pleasure to understand from you. In moments like these emotions tend to run very high. So when you look at what is at stake at this stage, Mr. Aiyar, from an economic standpoint, how should India be weighing the cost of this potential military response against the cost of inaction?
I think what you are going to see, above all, is an attempt on both sides to avoid escalation. On the one hand, there will be a desire to strike. On the other hand, you don't want it to get out of hand. In 2016, there was the surgical strike, which was such a limited thing that initially Pakistan wasn't even aware anything had happened. We claimed victory. In 2019, we bombed Balakot. They responded with an air raid. In that, they downed an Indian pilot who was then released. Both sides claimed victory and further escalation was avoided. So right now, what is the situation? I would say if you look at the economic scene, both at the stock market in India and the stock markets globally, right now people think India and Pakistan will manage this between them. There is a war of words going on, but it will probably not become a war of bullets. If it becomes a war of bullets, it will probably be, as we saw in 2016 or 2019, a minor exchange followed by non-escalation. So I think the world is assuming on the economic side, don't panic, don't rush into all kinds of assumptions. Probably this thing will die down. And both sides are very full of passion. It's not just the Indian side, the Pakistani side too. They say we've been attacked twice before we're going to attack back. The Pakistani perception, the Pakistani claim is that all this is just local Indians who are rebelling in Kashmir and the blame is being put on Pakistan. On the contrary, they are complaining that they are fighting a war against terrorists from Afghanistan and Balochistan and claiming India is responsible. So we have both sides claiming that they are not responsible for the terrorism on both sides, and both sides claiming the other side is in fact responsible. But I think this has gone on for sufficiently long. At this point of time, there is no panic. You might even say the world markets are yawning. They're saying, we have seen this kind of thing before. This is not a new movie. It's a rerun of an old movie. And with luck, nothing very much will happen.
Mr. Aiyar, you often pointed out that India's economy is most vulnerable to external shocks when geopolitics intersects in the kind of fashion that it is perhaps right now. In light of that, this potential escalation risk right now, even though you say the markets may be yawning at this development, is there any chance at all that it could derail macroeconomic stability, even if it is for a short term?
Without doubt. I mean, if suppose it comes to a shooting war, even if we manage not to escalate too much, anything whatsoever, it will have an impact on the expectations of foreign investors, of any shipper, any shipping coming up and down, of any trading coming up and down. All of those will be affected. Anybody involved in any of those areas will have to ask themselves, is this a war zone? Should we send our ships there? Should we send our businessmen there? What should we do about trade? All these questions will arise. So if a shooting war begins, it will affect our economy. If we avoid escalation, maybe it affects the economy only for a short time. If there is some further escalation, we have to see. There are, for instance, on the Pakistani side, they are claiming that China will also come in. If China really comes in, then I think the scene will change altogether. But I find that extremely unlikely. at this point of time. But as I said, there are best case scenarios and worst case scenarios.
Yes.
Even the best managed escalations sometimes can get out of hand. And you never know most disasters are caused by accident. So I don't think the two countries are deliberately going to go into a big war. But there is always a small danger that it will happen. But the two countries have a track record of managing this and
Yes.
both claiming victory. And that is why the stock markets are quite calm.
Right. So if you look back at Kargil in 1999 or 2016, the surgical strikes, or even 2019 when you had Balakot airstrikes, remind us how the markets reacted. Economic activity, how did we see response over there? Because one tries to wonder whether this Pahalgam response is unfolding similarly or this environment is fundamentally different today.
No, I don't think people are taking the prospect of a sustained war seriously at this point of time. At this point of time, it looks like all words. Not only that, very often they say that, is there a way of shifting the retaliation out of military to non-military means, which is one way of having an escalation of words and passions without getting into a shooting war. In this case, we have in fact taken that step already by bringing in the Indus Waters Treaty. So instead of just talking about how we are going to bombard them, we have said we can take away the Indus Waters Treaty. Now, in the short run, nothing can be done. The notion that you can somehow excavate and control the water, it's a mythology. You will have to build additional dams, raise the water. Then if you have that additional water, you'll have to find a way of excavating the water from there, putting it into new irrigation channels. Otherwise, it will flood India. So if you are actually seriously going to do anything, this will take minimum 5 years, more probably close to 10 years. And in that case, the entire war of words will shift to from military action to dam action. So we already have that safety valve right now. I think because we have that safety valve, that instead of being a war of bullets, this will become a war of talking about water. This is, I think, another reason why the markets are fairly cool right now, not disturbed.
So there is that economic strike by putting the Indus Waters Treaty in abeyance. That's one aspect of it. But also what's coming out today, the Prime Minister handing out this full operational freedom to the armed forces could be seen as a bold political signal as well. So that certainty in intent, do you think that's going to help calm the markets, or are investors still looking for more clarity on the scale and the duration of a possible conflict before it stabilizes?
I would say at this point of time, yes, the Prime Minister said the armed forces will be given freedom, but that is freedom at the border level. If you are going to actually have a strike, that cannot be given. That freedom cannot be given to the army. So if there is to be a strike, that will ultimately be political. As of now, as I said, things are under control from the point of view of most people. Even the extent of the Pahalgam strike, it's much less than it was in the case of Pulwama. In Pulwama, they hit and killed 40 people of the reserve force, which looked a much, much bigger hit on India than the current one, which unfortunately hit 26 civilians. So all I can say is at this point of time, the markets are taking it very easy. But if this escalates, then in the short term, there can be a very major effect on the markets. Obviously, as I said, everybody involved in business, in shipping, in trade, in investment, everybody will be affected.
Yes.
Maybe not for long, hopefully not for long.
But given
if China keeps out,
yes,
it should be okay.
Yes. But Mr. Aiyar, given the heightened risk sentiment that's going on globally, would it be fair to say that India can actually ill afford a prolonged confrontation at this stage, even if it is justified, because FPI flows, they're already on edge, aren't they?
FDI is a long-term thing.
FPI
is not going to... Huh?
FPI, sir. Foreign investments at this stage, we've seen that kind of reaction to global risk of sentiment. So if that
Yes.
happens, it's going to have an impact on our FPI flows as well, won't it?
Certainly have a effect on FII flows.
Okay.
FDI is taken on a longer basis. And, I can imagine that if there is a decision about to be taken, it would be postponed. So there could be some postpone of saying wait and watch for 1 month.
Right.
Uh, but but those are unlikely to be actually cancelled outright unless some major tragedy and a major disaster happens, which nobody is expecting.
And now with this potential kind of retaliation, we don't know the size and scale of it, but if you look at defense-related stocks, how they tend to rally in the short term, are such war trades meaningful economically or just speculative plays which have no real connection or impact on fundamentals?
Yeah, the fundamentals remain completely solid right now. That's why I said the markets are okay.
Yes.
They say, look, India's fundamentals are okay. This is probably a war of words. If it's a war of bullets, it will be small. So fundamentally, they said, we have seen this movie before. Don't get into a panic. Don't think it's a trailer for a major war. The two countries are clever enough to handle it on their own. They will satisfy their respective publics that they have had victory. So both sides will claim victory and things will calm down. So I think this perception that I'm giving you is very different perhaps from the mood in India right now, where the feeling is we must hit back in some way and cause them some great damage. And this may lead to a very major war. This is the kind of, I mean, there are some people in India who feel this particular way that we have to prepare for a major war. And, preparation is always a good thing. But the person sitting here in Washington, this is hardly news. It's more a news of terrorism than a news about war. The war is not expected at this time.
So, Mr. Aiyar, then what are you watching in terms of market behavior? Is it the volatility index? If I may ask you if it's about FII outflows or bond yields, what exactly are you watching in the markets now? What would you?
What I'm watching is a shrugging of the shoulders. They are saying that, at this particular point of time, don't get into a panic either for buying or for selling. Wait and watch.
Right.
With luck, nothing very much will happen. If something serious happens, then we will take note of that because that would be a serious change in expectations.
Right.
But the expectations right now are such that, frankly, while obviously Indian and Pakistani media are full of this particular preparation on both sides, and it is a matter of immense importance for the public in India and Pakistan. But in Washington, frankly, this hardly registers on the news, either on the TV or on the print media. This is not seen as a major event in forthcoming. It is seen as a possible remote tragedy, but not as something imminent, not as something on which businessmen should be acting.
So, are you also saying that India doesn't risk losing any economic momentum because of this? The FDI sentiment, any kind of business confidence, if you're going to see, if we are seen as stepping into a volatile zone, even if the provocation was undeniable, do you think we risk any of that?
No, the main thing is people will wait and watch.
Right.
There have been all these threats, and they've seen in the past it's there and it's managed in a few days. So a lot of people will wait and watch. As I said, because of the threats that have come out, there will be immediate reactions on things like trade, on will ships go into this area, will businessmen travel to India? I mean, all these things will be affected. So it's not that the effect is absolutely zero, but the effect will be more in the nature of wait and see for a week or two. Then we will decide whether there is something serious which we have to take more seriously. At this particular point, they're saying, yes, we will keep a watch on this, but it's not going to have any major impact on long-term things, especially like FDI. For a short-term thing, if you say keep out of a potential war zone in terms of your shipping or in terms of business travel, to that extent, there will be some effect. But the fundamentals of India would remain strong. The fundamentals would not change. So I would say that at this point, India does not need to worry. If you get into a shooting war, then people will say, can we trust these two countries not to escalate? That
Right.
is the point at which you will suddenly find, instead of being on the inner pages of a newspaper in the Washington, D.C., suddenly it will come on page one. That is not the case right now.
Fair enough. Of course, Mr. Aiyar, you've often spoken about how India has matured economically since the 1990s, but now it remains to be seen whether today's India, financially and diplomatically, whether it is better equipped to handle both retaliation and its aftermath. And that's something that's going to be an important piece for the markets, for business confidence. So thank you very much, Mr. Aiyar. It's always a pleasure talking to you, and these as far as the steely resolve that is being shown, economic prudence as well. India is at a critical juncture. Militarily ready, diplomatically, it's quite vocal. Economically, watchful as well. And markets may shudder, but it may do so because of the uncertainty, the kind of reaction that you may get as a knee-jerk. But what investors and citizens, global community, they're watching for now is clarity of intent, unity of purpose as well, and credibility of response. So we'll have to wait and see exactly how this pans out, and we'll circle
Yes.
back to you, Mr. Swaminathan. Thank you so much for joining us with your perspective tonight. We'll take a very